We have seen interest rates improve really nicely over the last 2 weeks. In fact, going back a month or so, we've seen a nice decline in interest rates. We got a very friendly consumer price index report this week, so we're going to talk more about it on today's video. So let's dive right into the numbers. Mortgage News Daily has the national average for a 30-year fixed rate loan at 6.99% today. That is a nice psychological move below the sevens that we have been trapped in for a good while, y'all. We've had interest rates above 7% nationally, so it's nice to be back into the sixes at the national level. 1 week ago, we were at 7.15%, so a nice week-over-week improvement. But if you go back 2 weeks, we were at 7.51 15 days ago, y'all. So we have seen a full hair over half-point improvement in interest rates in the national average. We're going to get into some of the reasons why that has occurred over the last 2 weeks. But just to talk a little bit about what a half-point improvement would look like on a $400,000 mortgage, that $400,000 mortgage, 30-year mortgage, just got cheaper by $135 a month versus what it would have cost you 2 weeks ago. Another way of saying that is that $400,000 mortgage, the payment on that $400,000 mortgage from 2 weeks ago will now buy you a $420,000 mortgage. So you just got $20,000 more buying power because of the improvement we've seen in rates over the last 15 days. That's very significant, y'all, and it brings up a point that I really want to stress, and that is the importance of getting something bought when you find it. Over the last 3 years, interest rates have been far more likely to trend higher than lower on any given week. And when you see this kind of volatility that can happen, sure, it's been to our benefit over the last 2 weeks, but it's just as likely to be to our detriment over the next 2 weeks with any bit of news that comes in that might be detrimental to the bond market. If we see that, the point I'm trying to make is, if you're going back and forth in negotiations with your seller over changes in sales price to a home, understand that changes in interest rates are far more impactful than likely any price concessions that you might be arguing with your particular seller. It's an important calculus to put into the mix when you are working through these offers. What might happen to interest rates while you were in negotiations with that seller? In other words, you might be straining at gnats on the sales price and you're letting camels into the tent with regard to interest rates. It's just something to keep in mind. It's something to keep an eye on. It's something to have a very close relationship with your lender so that he can be walking you through the daily changes that we see in rate while you are negotiating your best sales price. We want everyone to get the best possible price they can on their house. But if while they are working for that deal, interest rates go up significantly, then they didn't gain anything. In fact, they could have lost significantly for that. So it's just important to have all the information you can while you're going through that process. Here's what moved interest rates lower over the last 2 weeks. Consumer Price Index came out yesterday. The rate was 0.3%. It was expected to come in at 0.4%, so not a huge miss to the downside, but it was on the right side of that equation. So we saw a nice bump in the bond market because of that lower read on inflation. You know, this is on the heels of a retail sales report, y'all, that came in at a 0% increase month over month. We were expecting a 0.4% increase month over month. And keep in mind, this isn't a month. We're measuring April here, where a lot of folks got their tax refunds, and yet consumer spending was completely flat, dead flat month over month. You would expect in a month when folks were having more spending cash that they would have put it to work, but they didn't. They're apparently paying off bills with it rather than buying with it. So that miss in retail sales and that tamer than expected CPI number definitely put a bid in the bond market. It suggests economic weakness, and when you combine that with a softer than expected non-farm payroll report from this last week, you've got a nice recipe for rates improving, and that's why we've seen this half-point improvement over the last week. Gas is up 2.8%, y'all, month over month, and car insurance year over year is up 23%. Huge increase in car insurance. Anyone that is shopping insurance for either their cars or their home has seen these massive increases, y'all. Cars in particular are far more expensive to insure just because they're far more expensive to repair. They've become so much more complex, especially as hybrids have become a much larger percentage. Electric cars are much more expensive to repair. Plus, we've got an additional 10 million very likely uninsured potential drivers that are competing for that accident coverage out there without contributing to it in the form of premiums, y'all. And we're specifically referring to unchecked migration that we've had over the last 2.5, 3 years. So you put all those things together, you get a recipe for very expensive car insurance, and that's hurting a lot of folks' wallets. It's also what's tempering some of that retail sales. When you got to spend from your left pocket on something you don't necessarily want to buy, you don't have as much to spend from your right pocket on the stuff you might. So that's just kind of where we are at, and everybody is feeling that pinch. In any event, I hope this information is helpful. It's good news today with regard to interest rates. Happy to be able to report that. Hope everyone stays blessed this weekend. Stay safe. We will talk to you next week.